Good morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ, and it is the 12th of August as we are barreling through the lazy days of summer. Hey, Johnny, Juan. Hey, Trademaker. Hey, Jiraj. Cisco, aloha. How's paradise, brother? We still have to talk. I have to find out whereabouts you live on the island. Oh, man. Well, folks, here we are again. And yesterday on X, I posted sort of this graphic where we're kind of in a big balance. We're in a distribution balance, and we liquidated and came right back into that balance. So right now, the best thing for us to do, and that balance is 63.88 on the bottom and 64.38 on the top. Okay, it's a larger distribution. See, we had inventory down here. We took it and we distributed it. We put it on sale, and guess what? That sale brought in buyers. Now, you know how sometimes I show you on the 1 minute chart a distribution balance, and I'll say, oh, they're distributing. It's kind of hard to trade because it's choppy and the candles are small. Well, this is kind of the same thing because people are looking for directional moves, right? But there's really nothing directional yet. And, and I'm using the word yet because until we break 63.88 and get accepted underneath it, take out the 79s and the 69s, these lower levels, we did yesterday a look below and fail of 63.88. That trade that I talk about all the time, the look below and fail, once you master it, you can do it on all time frames. Hey, Johnny Trades. How's Port Jeff? Oh, Long Island in the summer, eh? There's another look below and fail. It's the same thing on a daily chart, 1 minute chart, 5 minute chart. The concept is the same because it's based on the same business, right? The business is sell orders take the market underneath a level. Those sell orders are complete. The market rotates back up. That concept of rotation is important, okay? So what do? We trade the edges. For longer size traders, what you want to do is you want to find a balance area and trade the edges of it. And for us, scalpers, we'll go back to our 1 minute chart and just keep doing what we're doing. So let's go take a look, a closer look here. We don't have a poor low in the overnight low. We just have 2 ticks of excess, right? Now, here's another reason. Everyone's asking me, JJ, why do you use the 5 p.m. close? Well, because if you had used the close here, you're going to miss some information. What you want to see is you want to see that M period went all the way down and did that look below and fail of 63.88. But look, the market went up after that and closed higher. And then you see that the overnight low couldn't get down to the previous day low. So what we're doing, we're doing these trades or this sort of business where we catch inventory, take it and sell it higher, in the overnight. Okay? So our overnight inventory right now is long, right? It's probably around 75% long, right? And we've had a correction, and that correction was quickly bought up. You see? Overnight inventory was long. It corrected about an hour ago. That correction was bought. So that means right now, the bid at 63.92, those are those unfilled buy orders underneath there. And who's got unfilled buy orders? Short sellers are the first people to come in and buy. Don't let anyone tell you any different. The reason I know this is because I've done multiple short squeezes and carried them out and orchestrated them. So I know the first people to come in and buy are people who are short when a market falls. Hey Raj, good morning, brother. Rufus, how you doing? All right. Welcome to the folks on YouTube. So, what do? How do we trade this? A lot of people get hung up on direction, right? One of the easiest things to do when you're trading so you don't get confused is you go, is the current trading session, right? Is it inside the previous day's range, right? If it's inside the previous day's range, then you want to trade the edges of it, right? I'll get to that in a sec, Johnny, right? So when you look at yesterday, right? There's the high, there's the low. As soon as you come in and you see we're inside yesterday's range, don't look for a breakout. Just look for back and forth inside that range, right? So what happens is a lot of traders will come in and they'll be looking for they'll be looking for a huge move down or a huge move out, but there's no reason for it. Because here's a simple little trick. If you were inside the previous day's range, then it's business as usual, right? There's nothing from yesterday's business that has changed today, right? Because if you did, we'd open on a gap up or down, right? A gap means change. And what is the change? It's the change to business conditions. It's the change to some sort of macro thing. It's a news event change, right? So if there's no change, there's no reason to freak out about, oh, it's going to go to 63.70 or it's going to go to 64.40. No, it's just going to bounce around inside yesterday's range because business hasn't changed. So that's one thing that can keep you from shorting the lows and trying to buy the highs, looking for a breakout one way or another. That's not going to happen, right? It's just going to bounce around while the people who bought inventory at the lows are trying to get rid of it at the highs. Because that's business, right? If I have to buy a bunch of cheap crap, I want to get rid of it higher, right? Just makes sense, okay? So overnight inventory right now, how do you trade it? We use the balance. Now, you go and you find an area of two-sided trade, right? You see that there are sellers, they stop selling, right? And you just use that back and forth, right? So when it looks below these lows, it comes right back to that high, right? That's all you're looking for. It's really simple, and you practice drawing these balance zones a bunch. Then you sit and watch them. And this is the sitting and watching part that people hate. People want to sit down, start trading, make money, right? But you got to sit and watch, right? I was I was going down to Somerset on the weekend, and it was like a 4 hour trip. So I was listening to my buddy Turney Duff, the book The Buy Side, and Turney's quite a guy, and he had quite a journey. Um, we met a long time ago. We were introduced by traders from Knight Securities when they were taking both him and me out on a night out on the town. And you know, the what the one of the things he says, and he was the head healthcare trader portfolio manager at Argus, and they ran some fairly decent deals. He did really well until he succumbed to Wall Street. And one thing he said is he would sit like a cat waiting for his opportunity before he pounced. And a lot of people really respected that. What you have to do as a trader, you have to sit and wait for your opportunity. And when it comes, then you just jump all over it, right? While managing your risk. That's why you have trade setups, because trade setups help you manage your risk, right? So the trades we like are when the market does the old look below and fail, look below and fail, look above and fail, right? Very simple trades, right? As a trader, if you resign yourself to the fact that your trades are based on two business principles, one is lack of supply, one is too much supply. That's all there is. There's nothing else, right? Right? You can get as fancy as you want, right? But there's lack of supply and too much supply, right? And then there's times when you don't trade, and then there's times when you do. Okay? So right now, I'm looking at this. I don't see a trade right now because it's nowhere near the edge, right? This would have been a nice little look above and fail down to the middle. But right now, the market's in the middle, and we don't screw around in the middle. Let me just go and check where VWAP is, if it's where I left it. Yep, still here. So you basically set up your charts, you do your balance zones, you set the VWAP, and now you wait for your opportunity. Is it the same business within a 1 billion balance, inside edges as usual when you break out of business? Yeah, yeah. Now, like say if you're here, right? Think about it like this, Lodigan. The balance is where the cost basis is built, right? Then you go and you sell it for profit, right? But then you run out of buyers and you got to put it on sale. If you have a big sale, you bring it right back down to where you paid for it. If you really run out of buyers and there's a ton of competition, you're going to have to sell your product at a bit of a loss. But that'll be offset by the profits that you make here, right? Does that help? If we're It's just the fluctuation of prices inside yesterday's range. So yeah, when I helped trade my friend out of that loss on Nasdaq, there's something that trading shops do, Johnny, is smart trading houses. When a trader is in a bad position, right? They can't think properly. They're emotionally attached to the trade. So if you're in a loss, the smartest thing to do is take the trade away from the trader and put a fresh pair of eyes on the trade, and you'll be able to trade out of it because you're not attached to that position. Does that make sense? So like really good smart firms, as soon as a trader is in trouble, they pull the guy off the trade right away. Get out of here, right? I remember there was one brokerage firm. We used to, and one of the head traders, his name, we used to call him the doctor. And he was just a character, man. The doctor. And he would, as soon as he saw somebody was in trouble, He wouldn't even wait. He'd just get up, walk over, and he would kick their chair and they'd go rolling because, we have these office chairs on wheels, right? So he'd go rolling off the desk and he just, take over the position and start trading out of it. It's really, it's when you're emotionally attached or you are attached to the outcome, that's why a lot of traders get into trouble and just keep compounding losses because their emotions rule them because they've taken leave of their senses, right? Of course, when you're in a trade, you are totally biased. And I'm not saying it happens to me. Happens to me all the time. Oh, I've got to be right. I can't be wrong. Oh, crap, I'm wrong. Oh, crap. Right? What I've resigned to do, and the only thing that's really helped me in this business is to be able to admit I'm wrong quick. That's really the only thing that saved my ass in this business. Is you've got to have the humility to admit you're wrong quickly. Because unfortunately, folks, in this business, if you don't have humility, you will be served humility. It the market will take you out to the woodshed and beat the holy living crap out of you. You have to be humble. The forces at play in this business are so large that if you get caught on the wrong side, and this is why I don't trade NASDAQ, because the margin for error in NASDAQ is very, very small. The order book is very, very thin. So if you're not totally on the ball, you are going to get your face ripped off, right? And even in ES, when it gets volatile, I'll just kind of sit back and watch. I would always rather let somebody else go first, right? And then go and execute. I have no desire to be first in this market. I have no desire to be a hero. I am just, I am not even a cog in the wheel, right? I am a fly on the back of an elephant, right? That's what we are. We are not, this market, if you have an ego, oh my God, this business will, whoo, right? Oh, it'll take you badly. Yeah, exactly. Like I'm cheap, so I didn't need to lose a lot. Exactly. Right? I lost a couple of $100 and I was like, "Oh my God, I have no idea what I'm doing. I better sit and watch." Right? Exactly, Cisco. Right? And I'll tell you something. When I first started trading, after I took because a friend of mine had me trade his account, he was after my heart attack. He looked after me. He gave me a job with his company, and the company's called Scans. I'll give them a promo shout out. Great scanning software for equities. I've been using their software since 1999, and he heard I had a heart attack. He offered me a job, and that's when I started talking to retail traders. I wouldn't be here if not for him. And um, and then he said trade my account, and I lost about $300, and I said I got to stop. I can't. He goes, you can lose up to 1,000. I'm like, I don't need to lose 1,000. I go, I don't know what I'm doing. And it was one of the most embarrassing things for me as someone who is, let's see if we could take out 6409, someone who has manipulated stocks, held stocks at 90 RSI for 3 months. When people they wanted me to work on a deal, they'd send a plane, they'd put me up in $1,500 a night hotel rooms. This was back in the 90s, right? I went from that to not being able to trade, like just my way out of a wet paper bag in a retail sense. It was demoralizing. So if you are having trouble out there, right, don't worry about it, right? right? If people who, people get it wrong all the time in this business, right? You just have to be able to admit you're wrong quickly, right? And get out, right? Be quick. If you're starting to trade and you're taking more than one or two losses, I don't know if you're listening, my friend. After your second or third loss, you got to stop trading. Step away because you're missing something, right? The trade will always be there, right? Your account will not always be there. You have to protect the money in your account. Even if it's a funded trader account, you got to start thinking in a defensive manner until you have the skill to be offensive or until the time to be, to go on offense, right? What we're trying to do right now is we're just in distribution. We're taking the cheap stuff down here, right, from yesterday's lows, and we're selling it off here. Margin requirements are higher tonight. Thanks, Raj. So there's less people. Yeah, the key to this business is longevity, right? The key to this business is discipline. And somebody yesterday DM'd me and he said, I hate the fact that making $50 a day is an accomplishment. Because I was saying, look, most traders don't even make $50 a day consecutively for 6 months. They don't. They don't. Right? Yet they're looking to make 5 grand a day, 10 grand a day because they see all these stupid marketing videos on YouTube, right? Which is not doing anybody any good, right? That's what I fight against every day when we're running the trading syndicate is to give people good information so they can actually make money and also good information so they don't get blown up every day because this is one of the most demoralizing small businesses you can go into. I think the only other business is trying to be an actor and getting told, you know, you're not good enough for this role, right? Right? It's demoralizing. I want to try and help people, but you guys got to listen. And I think I know, you know, who this is directed to. You know who I'm talking to, brother. You got to listen. There's a learning component to this business. And it's a disservice to tell people, "Oh, you're going to make this amount of money. Oh, this is easy. Oh, this is, free money trades, all this BS." Right? It's total BS, right? You just got to be here the next day. That's what old Mr. Thompson told me when I started working at my first brokerage firm. This guy was 70 years old, worth hundreds of millions of dollars, took the bus to work, bought 3 suits for $99, right? Was cheap. And he said, "Listen, you don't have to make all the money in one day, right? You got to be long-term greedy. Think 5 years, 10 years, right? And if you don't want to put that kind of time in, that's up to you. But it's going to take time for you to be profitable, and it's going to take time for you to actually learn how to do things, right? So while you're learning, try and make a little bit. Don't try and hold trades for 30 points, right? Don't be delusional, right? Have some common sense. Now, London's going to open here in 4 minutes, right? I've been preaching for a half hour now, but I feel that I got to do this, man, because I see you guys in the rooms and I see you guys talking, And it's just not right. You got to give your head a shake and get with reality, brother. As the Hulkster would say, get with reality, brother. Right? You got to get with reality. This is a savage business, right? It's a savage business. Protect your money. Protect your mental health. Don't make stupid decisions, right? You'll get there. But we all go through the spanking machine. There's no avoiding it. There's no avoiding it. I know I come off as preachy, but you should see the messages I get because I'm ahead in the UK. So I'll wake up at like 2 o'clock in the morning and I'll have all these messages from people in my room and even out of my room. And they're like, I blew up my account. I did this. I took all these bad trades. I did this. I did that. You got to stop the madness. You know, these guys who are marketing trading systems and all this BS, they should just be taken out and given a good beating for putting the wrong idea in people's heads. It's just rude, you know? Like right now, why have I been talking like this for right now? Because really, literally, for the last 28 minutes, there's been no trade. I mean, sure, you could have shorted 6409 and let it drip down to 6, but not really. You know why you want to hold longer, Travis? Right? It's because everybody in this trading room, right? And everybody out there are conditioned that they should be 20, 30 point traders when they don't have the skill, right? And then you hear things like, oh, you know, if you were at this prop trading firm and you weren't holding trades, well, you're not at a prop trading firm. You're sitting in your underwear in your living room, right? You don't have a compliance officer. You don't have a head trader teaching you. How in the hell are you expected to make 5 grand a day, $2 million a month if you don't have the support? You have to build up from somewhere, right? And I see it in the trading room all the time. Moran, you're hilarious, right? I see it in the trading room all the time. Oh, you should be holding trades longer. Are you really well, you don't know what you're doing. How can you maximize your edge if you don't even know what an edge is? Right? Right? Take the money and run. Do not be greedy. Greed kills in this business. Right? Hey, Johnny, what's up? Right? How you make more is you size up on 3 to 5 points. 2 to 5 points, 3 to 5 points. You just add contracts. Right? But you don't do that until you're consistent and until you have a business plan that you can actually execute with consistency, right? And that's the boring part, right? And here's the other thing. The worst thing is when traders, and I see that even everywhere, they're like, oh, I just, I had just held this trade for 30 points. And they're always, the 20, 30 point traders. They never tell you when they get stopped out. They never tell you when they get losses. What is Edge? Edge is a business transaction that is repeatable, that manages risk, MXM. So if you have a certain set of circumstances under which you do business, which is repeatable and manages risk, that is also scalable in time and size. But let's get to that later, right? So my edge is when a market goes underneath a level and comes back up. I know that those sell orders are done. So I'll buy, put my stop here, and then ride it up to the next level, right? That is a that is a transaction that occurs every on all time frames, right? That's what edge is. Edge is nothing more than a repeatable set of execution parameters, right? That manages risk, right? So edge is the business reason for doing a trade. So say you were shorting here, right? You'd put your stop here and you'd be looking here for a cover. Why? Because you see sellers competing here and you see sellers competing here. So you can short it down to 4, but when the sellers start raising the price that they're willing to sell at, you got to cover, right? So there's got to be a business reason for the trade. Your stop is a place where if that business reason is no longer valid, you're gone. And then your target is based on where they sold before. They will sell again, right? It's really simple. Keep it really simple. Now London's opening. Let's see if it can take out this K low here, right? And get down to 6,400. Now we're going to see what lies beneath here, right? I haven't taken a trade yet. I'm just watching to see where the market is finding bids. Well, Rasto, you and I have worked together, right? So, and you need to do a session. 2 to 5 points is great. Where's your stop? What have I told you, Rasto, about the stop? Right? The stop has to be based on the business reason, right, my friend? So say I was buying here, right? I'm buying 6401, 6402, right? Yeah. My stop is right there. That's it, man. Black and white, right? So you don't have to pontificate on whether or not you got to hold a 7-point stop, right? If you are long inventory at 6401, right? If you're long inventory at 6401, right? And somebody comes and offers it underneath 6400, should you be holding inventory when someone's offering it lower? There you go. So I don't see where this 7 points comes in, right? Put your stop there, put a sell order here. Say you buy 6 contracts, sell 3 here and sell 3 here before this level. Make your money and be happy, right? After the fact, it looks a lot easier, right? But don't get into this. The trader comes up with the idea to hold longer to catch a bigger profit to offset the put. That is the worst business idea ever. Like, if you read that back out loud, what you wrote, Rasto, right? Read that out loud, right? The trader comes up with the idea to hold longer to catch bigger profit to offset a potential 7-point loss. When you say that out loud, do you realize how ridiculous that sounds? And it makes no sense at all in a business environment. Sometimes, folks, we got to say things out loud, right? You got to say things out loud to see. I do it all the time, right? I say things out loud, and do I sound like I'm off my head? Or does that actually make sense, right? So why would you be taking a 7-point loss on a 2-point trade? Which means you're in the wrong place. And that happens. Don't make that mistake more than once. It's exactly what I do, Johnny. I draw the levels on the ES and then I take the trades on MES, right? Sometimes, folks, if you're thinking something, write it down and say it out loud. You will realize that so much stuff that is said in trading rooms is just absolute, excuse my language, bullshit. Because people who have no idea what they're talking about are just spouting things and it's just verbal diarrhea. And there are people, and God love them, they just keep talking and talking and talking, but they don't know what they're talking about, right? Use common sense. You're in a business. And that's what we teach you at the Trading Syndicate. We are going to go through, and I'm warning you guys, the markets are not going to get easier to trade as we go into the fall. Okay? If you think they're difficult now, just you wait. Okay? As we go into the last quarter of this year, right? People are going to be trying to get their bonuses, so you got to be smart. Okay? You got to be smart. Let's look for reaction at 6409. Okay? Because London couldn't get any lower, so it rotated up. Learn the concepts of rotation. Learn the concepts of balance. Right? Practice. Hey, Patty, how you doing? If we get accepted over 9, we're looking for, what are we looking for, folks? Right? We're going to be looking for here. Right? There's going to be sellers at 11. Right? News at 11. So say you went long at 4 or 5, right, sorry, 5, 6. If you went long there and we creep over 9, you know that there's going to be competitive selling because we got a poor high. Right? Nice work, man. Nice work. Right? Way to focus. Right? That's that middle trade. You've really, Moran has really captured the middle trade. She's been watching that for like a year now, and now she's all over it. Look, before we get to that level, they're already front running the sell. It works. That's good. That's good. Love to see it. Right? Look, the sellers have stepped in. So if you were long at 5, 6, you should be out at 9. 4 points on one E-mini is $200. On 3 contracts, that's $600. And you're done. Learn how to do it on micro. Get consistent. Right? Take small profits and then scale up in size. Right? Base hits add up. Okay? They're front running that level. That means that the sellers who were selling here before, right, are going to sell again. If you know where the sellers are going to be in your long, right, and you're scalping, you can get out of your long position at a decent price. Because if they start price competing here, they'll come right back down. Now, I'm looking to see if we take the overnight high. But if we don't, look how they're competing. So wouldn't you have rather sold at 9.5 than wait till it comes back down to 7? Pete Rose, yeah, exactly, Cisco. Right? Now it's going to work out this 9 level, right? And let's see what kind of selling competition comes in. Let's see if any buying comes in that we have the justification to raise price, right? Nice trade, Moran. Well done, right? And now you can see, look at, and this is what candle people, I wish they would make candle chart analysis a little bit more simple. That's another thing I'd like to do. Look, you see the tops of those candles? That's where the sellers are stepping in and competing. So that means, now let's see if we get a print at 10 and a quarter. There's a quarter print, right? So we found some buyers. But is there follow through? And can we take out this 11? Well, there's a bid. Look, they're bidding up, but they're filling it, right? Just sit and watch. You'll learn so much. Watch the offer. That red line tells you everything. The red line sets the price, right? The offer is the sellers. If the sellers see buyers, they will raise price. If the sellers see that we're running out of buyers, they will lower price to capture the buying. You have to capture the buying. Okay? Because they're selling more than one contract, right? This is distribution, right? This is accumulation. This is distribution, right? The cost basis of the overnight session is here. This is distribution of that cost basis for profit. If they can hold price over 9, it will attract buyers and you may get this and you might take out that overnight high. But that's not a trade. That's something we're looking for, right? You want to trade from the edges. When it looks below a level, it'll rotate back up to the other level, the top level. See how the offer is coming in? So how do you, like Moran, where did you go long? 5 or 6, somewhere like that? Right? You're long there. You know that there's going to be sellers there, so you sell a little bit ahead. And that is practical, smart, pay your bills trading. And that's what we teach you at the Trading Syndicate, right? Don't trade this. The move's over. Don't get involved. Now you're late to the party, right? Long at 5.5, right? And your stop was what? 4 3/4, 4.5, right? And you sold into this. Beautiful. Nice. Really nicely done, right? Exactly, Johnny. Stay away from the barcodes. See how they're distributing between 10 and 9? It's like a little box. So either that's going to attract buyers because price is stable and they can lift price, or if we run out of buyers, we're going to have to bring her back down. Let's see what happens. I have no idea what's going to happen. And that's the beauty of it. Once you say, I don't know what's going to happen, then you stay away from trades that are not at the edge. You know what I mean? It's a little too small for me right now, Johnny, that balance zone. I like, for my balance zones, I like 3 to 4 or 5 points. And it also depends on the range of the market, right? If I came in and we had like a 70-point range this morning, then the balance zones would obviously be a bit bigger. When you have a tight range in the overnight, then your balance zones are going to be a little tighter. You know what I mean? But like 1 point is too small for me, right? Right. Just focus on your business, right? And see how the offer is coming lower now, right? Look, they ran out of buyers over 9, so now they're putting it on sale, right? Got to put it on sale. Why do they got to put it on sale? Everybody says, wouldn't they want to sell it higher? Sure they do, but you're not the only seller, right? You've got competition amongst sellers. You know, people always say in markets it's buyers fighting the sellers. That's not business. It's sellers fighting each other to capture the buyers, right? Think like a seller, right? Think like a seller, right? Watch the candles. When you're in a trading environment, even if you're in a trading room, right? Trading rooms are great, and ours is one of the better ones. But ignore what people are saying and focus on the chart. Because when you listen to people, especially if they're just talking and talking and talking and talking, it's going to distract you, right? Focus on the chart, focus on the offer, right? Exactly. Nobody wanted to pay 6409, and other sellers stepped in underneath 9. So the sellers are now, this is called price competition, right? Just like when Walmart competes with um, Sam's Club, or no, Walmart competes with another store. I don't know what the stores are like now, right? Best Buy, right? They're both selling the same TV. Remember, you see, we will not be undersold. That's what's going on now, right? They're trying to capture the buying. They own their product at 4 and 5. So they can sell it all the way down to 4 and 5 and still make a profit. Would they rather sell at 9? Hell yeah. But for now, right? For now, they will sell where they need to turn their inventory into cash. Right? That is the business of a market, to turn inventory into cash. And then do it again. Right? It's the world's largest car lot. That's all we're doing. Right? Now there's no trade here. Right? So what Moran did was, she's been taking trades from the middle when it looks below and fails, right? This is the first way to master that trade, because trading from the edges will give you the confidence to take these trades later, right? But they're based on the same thing. The sell orders are complete, the market rotates. The sell orders are complete, the market rotates, right? The look below and fail is the oldest trade known to man, right? Since the first caveman was selling rocks, when he ran out of rocks, the price went up. Right. I know this session has been a little preachy, but I think it's essential that you guys and ladies have to hear this stuff, because it's going to be a challenging market. You have to be able, you just got to do it. And last week I wasn't really feeling that great health-wise, so I kind of I was kind of like slipping in my education. So I'm trying to make up for it this week. And I got a lot of messages from people who are not doing well. And it's It's because the market changes, right? And then the president goes and changes the tariff thing, so everybody reacts, and then it reacts the other way, and then they keep changing the macroeconomic stuff. So it's very hard, you know. It's it's like Jeremy Clarkson says, it's like trying to ride a tiger that's made out of jelly and teeth, right? It's very challenging, right? Look, we're coming right back to cost basis. See that? Thanks, Johnny. Right? Right back to cost basis, right? Spend some time watching the market. You're going to spend 1% executing, 99% watching. The more you watch, and the more you watch from the um, the vantage point of curiosity, the more you will absorb. If you're watching and you're like grinding your teeth looking for a trade, you're going to miss a lot of the subtle stuff that makes a big difference. The devil in this business is in the details. Okay? Be curious and watch. Be light about it, right? You're learning. You don't have to be all stressed out when you're learning, right? The only thing that kept me from blowing up accounts was that I would always go and get a couple of jobs. There's another look below and fail of 4 3/4. We came right back to cost basis. They stopped selling. Rotation up, right? It's the same thing here and here, right? Now we're looking for sellers here. Yeah, you don't lose as much capital and you don't have that mental fatigue, right, Johnny? Which just that mental fatigue from taking loss after loss after loss, that's what leads to heart attacks, right? You don't want that. Bad health, stress, ulcers, all of that stuff. I had one boss of mine, he used to have a bottle of Maalox on the trade desk, a bottle of Maalox in his office, and a bottle of Maalox in every single car. You know, and he had a brilliant career until it all flamed out. He went out in a blaze of glory. Well, not really glory, but he went out in a blaze. Look at that. The sellers are right there. It's at 8 1/4. Do you see? So you come right down to cost basis, right? And back up. Down to cost basis and back up. If you can get into the process of enjoying watching, you'll be able to absorb much more information. So when you actually take trades, you'll be more intelligent about it instead of just desperately taking trades. Okay? Right? Exactly. This is a rotation, Moran. Exactly. Right? So if you came in right now, if those of you were looking to draw a balance zone, you would see the top there. This would be your balance. Like boom, boom. Look above, fail, boom, right back to the top. You see that? So you have a high and a low. When you look above that high, you go right back to that low. That is rotation, right? So when the market breaks out of this rotation, you can double this to the upside or to the downside, right? It's a simple, beautiful concept. Yeah, exactly. And over trading, The problem with overtrading is, yeah, by the time your trade comes, that picture perfect, beautiful trade, you're either in a bad trade and you can't take it, or you're burnt out and you have no capital left, right? It's brutal, right? So the other thing about rotation is it helps you manage your expectations, right? It helps you manage your expectations as a trader. So this way, you're not foolishly buying up here looking for a breakout or down here, right? You sit and watch, and you can take the edges of that rotation. Once you understand that a market is rotating, why is it rotating? Because business is slow. So the traders, see now it's trying to break out of this rotation. Does it look above and come back in, or does it look above and go? Maybe it goes this time because we flushed out a lot of the people that we jammed in here. Let's see, right? And if it does, it means those sellers at 11 see buyers and they're going to raise price, right? If they don't, it'll rotate back down. Right? Right? And sorry, Doc, don't get influenced by what Doc is writing in the chat, okay? Just because he's holding a trade for 24 minutes doesn't mean that you need to as well, okay? Don't get influenced by stuff like that, right? Learn how to trade on a smaller time frame first. Okay? He's been with me since the beginning of the room, and he has gone through the spanking machine multiple times, right? He's had his ass handed to him multiple times before he learned how to do this. So don't be influenced just because he's holding a trade for half an hour doesn't mean you have to, right? So I love you, Doc, but I just don't want you influencing those other people. They're like, oh, I want to hold a trade for 20 minutes. You know how people are, right? Learn how to take 3 to 5 points and make your money, right? You don't know the pain that this man went through when he was learning, okay? He's paid his dues, so, and he's taken he's taken shots to the head, right? So just focus on your business. It depends on how quick the market is moving. Sometimes when you do the look below and fail, you just got to get in there because the market's moving quick. And if you take that trade hundreds and hundreds of times, right, wait till it clears the level. Then you buy it and put your stop. Do it on the sim so you learn the keystrokes when you're using your software. Do that at first, right? I like to wait for another candle. Like if it, like right here, it looked below and failed. This is beautiful, like right here. This is the perfect setup. One sec. Right? Let me show you right here. This is beautiful, but sometimes you don't get it this slow. You see how it looks below 6,400? And then it fails? And you get this nice 1, 2, 3, 4 green candles? And you can buy 6401, put your stop underneath the bottom of those candles, and then sell into that rotation. But sometimes you just get one big green candle and you got to buy the offer. So it's different, right? It's not the same every time. That's why you need to look and watch and take that trade on the sim a bunch of times so you familiarize yourself with different types of price action. That's a good question, P. Hunter. And it's just doing it over and over and over again. You'll get a feel for it. Okay? All right, folks, that's it for me this morning. Thanks, everyone. Come join us at the Trading Syndicate. I think Steve's still running the sale. If you have any questions, please feel free to DM me at any time. I'm always around. I'm vwaptrader1 on X. I appreciate you all being with me at this crazy hour. Mahalo, Cisco. Thank you, everyone. Trade smart out there. And if you need help, reach out, okay? Thanks, folks. Bye for now. We'll see you at 9 a.m. Eastern Time for my next session. Bye for now.